Hi there. Okay. Yesterday I blown on account from Top Step. I bought that account 7 days before, a week before. I traded one or two trades every single day and risk pretty much $500 in every single attempt. Only one trade out of 7 to 8 trades, only one trade was a winner, which gave me 1%. Rest of all a loser. Most of the trades are dumb shit, not a good quality trades. And it lost for almost a week, and I blown that account the Friday last Friday, like yesterday. To one trade, I only had buffer for $500, so I execute one trade a bit earlier. Um, Before I get the proper confidence, I get manipulated and entered early, and I get stopped out. After that, it's auto liquidated my account, so I had to buy another account before I move on to Monday. Make sure I'm gonna pass that account, bro. No matter what, I'm gonna pass that account. How hard it is, I don't care. I'm gonna do it in a way like I only gonna execute two trades, which should be A plus plus models, and it should give 1:2. I'm gonna risk $750, at least $700, and try to make $1,500 in one trade. So which mean technically I can I need only two winning trades. So Monday I bought that account, and I'm going to plan for that two trades. It should be super easy. Very easy, bro. I'm gonna showcase the progress as quickly as possible. So now I'm going to um, explain what the reason why I plan to execute those two positions. Like, yeah, that position. The idea was good. The entry was good. Only problem is I entered bit early. So I don't think I need to go to one notation, right? Which is 29. Beautiful. These are the screenshots. Okay. This is a daily candle. Sorry, weekly time frame. You can clearly see the weekly close. This is a Friday, right? So I had to check it out the weekly. How how was it? So the weekly is this. Market is super bullish, and after the last up close candle, it's been one indecision and start to sell off. I don't know how long it's gonna be. The whole week traded inside this range. It failed to clear out the high or low. What about week daily? This is the daily time frame. The only reason why I went long, I was bullish for the whole day. The reason behind that is, but the market is completely bearish. The reason behind that is I saw this value of get flipped. This one keep on holding. This engineered liquidity, like it's a clean engineered liquidity. This reason bullish value of holding the price keep on holding. Next push to the upside close above all this liquidity. Candle close, which is also close above the fair value gap of bearish fair value gap. So I was like, so okay, I can go for buy now. So targeting this side, that was my game plan. That's the reason why I wasn't buying anywhere. I'm just buying here. After this, after the previous day low, I start executing my buy orders because that's the only thing I can do, right? After this much more, how can I go for short? So but honestly speaking, I didn't expect this much reaction from the market after this. So obviously, this is not a flip. If it is a flip, it should ran through and keep on moving higher, right? It didn't. It just closed above, but it instantly get rejected, and the next following and it closed below this range. So which mean they change the state. So we can obviously expect the continuation in the following week. Daily time frame. This is 4 hour. In 4 hour, you can clearly see this value of getting flipped. This value of holding the price. So the problem here is so and it's also a clean engineer liquidity, right? So I targeted this fellow, but unfortunately, it reversed its direction. It gave the change in the state. It's leave this in balance. So it's most probably come and sweep this low, and then it's move higher, I guess, if I'm not wrong. And this big Powell candle, like the Powell news candle, it's keep on holding the price pushing higher. After cleared out this high, after cleared out this internal one last time, it started selling off. This is what uh, exactly happened, right? Went a low, cleared the first leg, fell to displace through the swing low. Now it's cleared out this high. Now it started displays lower towards this swing, towards this swing, right? Yeah, towards this swing. This is nothing but the news candle, bro. This is a big data. I don't know what kind of data it is, but it's a data high, data low. It's clearly sweep the data lows. But it's all of unfortunate move, bro. Its whole move was in the Friday. It's a great selling. But 1 hour, in 1 hour you can clearly see something. Sorry. So 1 hour, it is a news candle. You can clearly see the data low and data high. Price keep on go trading higher, cleared out the data high, and the recently formed a family of holding the price, pushing up on last push towards upside. Then what? It's clear change in state. But when I was in the market, market was here. Quick dump, current swing. It is kind of it's a big displacement. Order flow is bearish, and it's last formed bearish fair gap. This one also, and it's swept the recent highs and big displacement, change the state inversion, come all the way down towards the news candle data low. That's what we see here. So, so since I was bullish, I expected it to hold, trade lower, sweep the high, give some bullish reaction here. I was completely bullish. I planned to see some buying reaction here and here, but it didn't. After that, so at least I like to see some buying here. But after the big move, get released after the big move, big festival downside, my race clearly, obviously consolidated here. There is no movement after that. Come on, swept. There is a moment just to keep on rejecting, consolidating here. So this is M15 row and recent current swing. This is a 1 hour fair value gap. The recently formed high already swept. If you project this level, it is clearly reached the 50% level, which means equilibrium level. Um, Save some sort of liquidity. The only problem with this flip is this is the news candle pump, so I don't know whether I'm gonna trust this or not. That's the only problem with me. It's consolidation after the nice consolidation trade on law after the news candle. It's manipulating to the upside, sweep some liquidity, get into that 1 hour fair value gap. Then what happened? It's again accumulated, again sweep some sort of internal liquidity, inversion with big displacement, bro. Inversion with big displacement. Bleeding towards It's keep on bleeding towards the data low, and you can clearly see this fair value gaps. But this is not the good fact. This is great displacement, bro. How good the displacement is, right? It's a clean flip, and how good the displacement is. And the next candle gave nice structure shift. If I'm even look for buy here, there's no point of going for buy because the next 15 minutes. It's kind of break this level, break off, flip all these fair value gaps. It's clean displacement. So obviously your draw liquidity should be this is all the low resistance should be the data high. That is where the market heading towards. 5 minutes. Yeah. In 5 minutes it's still the same. It's engineering. What happened? Sweep some sort of like get into the 1 hour after the news candle. But this is not only investing 15 minutes, it's investing 5 minutes and 1 minute as well. Sweep, interval sweep. Here we get the change in the state. Inversion, big displacement, there is no pullback, nothing, bro. Just a big displacement, there is no fair value gap in 5 minutes. It's a big displacement, come all the way down to data low. Come all the way down to data low. 10 o'clock it's come to data low. Then it reverses its direction. Might be the 10 o'clock reversal, right? Yeah, bro, 9 to so 9:30 to 10, it gives a nice flush. After reaching this data low, it gives some really nice push to the upside. Again, one last time traded lower. This is where I supposed to execute my position, but I instead execute my position here, get manipulated. This is 5 minutes. Mm, this is 1 minute time frame. This is what happened in 1 minute. M1 time frame, H1 sellers fair value gap, news candle pump, 8:30 news, and its data low is now current data high. It's keep on accumulating here. Swept on last time, inversion. Here it gives the change in the state. Then this is the market opening candle. The next two candles trade inside the inversion and fell to close above, reject, and which gave the change in the state. And after that change in the state, there is no price reach this point, right? After this change in the state, there is no point reaching the place. It's keep on, and it's flipped this fair value here. Also give the change in the state here. Clearly flip the fair value here. Trade lower, keep on trading lower. So as soon as price reach this liquidity, what happened? Big flash. This is where my friend entered his position. Why? The reason behind that is this is where the this is where my friend entered, but I couldn't identify why, because it's price out of place, but it's price already in higher time frame value up, and it's manipulating upside, sweep some sort of liquidity here, and it's also already a 1 minute family gap right there. After that, it's nice accumulation in. After that, it's a nice accumulation. Swept the level last time inversion change the state. This is where we need to supposed to enter a position for the stop at this high. That should be the optimal trade for the day. And it's clear, and it's pretty much flip all the fair value ups, and it's pretty much flip all the fair value ups, right? Flip all the fair value gap, and this is the 15 minutes candle closure. The next candle will open up. I think this is the 15 minutes candle closure, and the next candle will open up, trading higher towards this inefficiency failed to close above. Instead, it's flipped the fair value. Here, the next candle, the next follow-up candle. Here, my friend entered his position for the stop at this high, and he's closed his position right here at $1,000 in the matter of 3 minutes. But I'm not able to recognize that this move at the point of time, so I'm not even execute any position here. It's a nice sweep inversion to change the state. That should be the entry, but still it is inside the fair value gap, so that's not something good. But if I move to 5 minutes, it's a clean sticky shift plus nice flip, and it's good follow through. And it's kind of after this candle close of 15 minutes, next candle open, manipulating to the upside, failed to close above. Instead, it's flipped this level here, entered, and he closed his position right here. And what happened then? It stayed all the way down to what? It stayed all the way down to good 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 flush, right? After he entered, it nice flush to the downside, rebalanced to this fair value gap. Again, started sell off aggressively towards downside. Again, it's rebalanced to this breaker to this fair value gap. Again, started sell off. It's quick quick flush to the downside, bro. And this is where I want to see the reversal after expanding to the certain extent. Price reaches the data low, and it's failed to sweep, or else it's print the equal lows here, and it's leave this and it leave this low open and unfilled or swept. Go, it went all the way up. It's give the initial change in state. I understand that this is just the initial change in the state. After the big displacement like this, you are not supposed to trade like this kind of entries. It's if you move to 15 or 15 minutes or 5 minutes, it's nothing, just a one candle. So what happened here is this is our last leg, right? This is a last leg, and this is our order block, clean fair value here inside this range, and it's kind of it's not going to sweep the low. Instead, it's give the change in the state at big displacement, and this fair value already get flipped, and this breaker holding the price pushing higher. Flip the fair value gap, and this breaker holding the price pushing higher. But I was like, I marked the 5 minutes. If I marked this fair value gap as well, if I wait for this fair value to tap, most probably I'm not entered the position. If it get tap, I can enter the position, put the stop at this high. That will be great. If I execute my position right here, put the stop at this high, I'm not get stopped. Holy shit. Well, this is for this whole swing, for this entry. For this entry, my stop loss should be here. This should be the stop loss, not this one. This should be the stop loss. At least this should be the stop loss. Optimal stop loss should be this. So the reason why I entered this position, it kind of an impulsive move, but I got the reaction, but it's impulsive reaction, initial manipulation. I knew that it's going to come lower. It's just the first leg. Go all the way up, print this in after this structure shift, it gave this fair value up. And as soon as it tapped the 5 minutes, it gives a nice reaction, big displacement plus fair value up here. So I entered my position, put the stop at this high, but it gets stopped out almost $540 out. And at that point of time, I already I blown my account. I exceeded my $2,000 limit. Right. So here, what I'm gonna tell is, so this is the initial manipulation. My plan was right. It's going to come here for sure. But my plan was right. But I was better earlier. What happened here is price flip this earlier, but instead of coming to this point, it is this breaker holding the price, pushing higher. Again, one more inversion, right? Pushing higher. Again, one more inversion, going up. Cleared out this liquidity. Print a low. Clear out this liquidity. Get into this fair value gap. After that, what? As soon as price get into this fair value gap, it gives a really nice reaction. Nice reaction, which means the fair value gap get flipped here. As soon as I get flipped, I enter my position. I entered my position, but it's auto liquidated while it's give some sort of pullback. Fair value gap, flip, the next candle, go, try to trade inside this range, but failed. It's rejected. Next, we got the follow through with change the state, then the breaker getting tapped. Then what? Big displacement towards what? Towards sectional draw. Towards sectional draw. As soon as it sweep the liquidity, as soon as it sweep the liquidity, it's print a low, print a high, print a sweep the low, change the state. While I watching this, ES print a higher low, while it's print a lower low, which means it's clear SMT, it's print SMT, change the states, and it leaves this value up open, so we can enter the position here, put the stop loss at this low, targeting at least this high. This should be the low hanging fruit for us, but ES ended up taking this, but ES ended up taking this high, but NQ didn't. NQ the max range was this. Max range for NQ was this. After that, it didn't move to this far. It's kind of coming all the way back and sweep this low, sweep this low. But in years, this low continuously getting protected until this high getting taken. Yeah, man. But yes, it's not clear, but NQ is very clear, bro. So if I'm just waiting for this price action to occur, I might not get stopped out. This is a good move, bro. Most of the time, after the big flash, price rebalance to some sort of value gap. And then if I move on to 5 minutes, it seems like it's flipped this fair value gap. It's kind of closing above, but the following candle disrespect, which means uh, instant rejection with big down close candle, which means it's not a flip. If the actual flip means it should go higher. It should go higher, at least like this. If it's not that, if that's not the case, which means we are wrong. So this initial manipulation, even though it seems like a good entry, enter here, put the stop at this side. What's my draw on liquidity? What's my draw on liquidity? This should be my draw on liquidity, which means it's not going to give 1:1. I should avoid this entry. This is okay. This is pretty much give 1:2. If I keep my stop here, pretty much give 1:2, 1:1.5 at least. But here it's not going to give 1:1, bro. Why the hell I just because it gives a flip, just because it gives some reaction. This is not a fucking good reaction. This is a really good reaction. That's the reason why I trust this, not this. Because this is just a initial manipulation. And trade on last time high has swept, print a low, sweep the high. After cleared up this high, after entering this value, what happened, bro? It's cleared up this high, flip this value here, change the state. The three things is enough for me to enter the position, put the stop at the high and targeting this. And I clearly know, I consciously know this model is completely ended. I should close all the position right here. If E is cleared out this low, if it stayed here, it should be SMT, something like that. So I should most of the what happened? It's initial move. Price might come and sweep this low and go higher. As price come and clear out this first leg and go higher. So a lot of things will happen. So always you need to compare the ES with NQ to get this kind of informations. But in this case, ES and NQ play the same game. It cleared out this liquidity, but instead of um, doing the same with here, it's print SMT, real SMT here. But it's not worked. The whole day was just a consolidation day. Yes. So this is the pure impulsive entry last year, but there is a clean entry. I executed it, but I didn't. Due to I don't have that account, it's almost already blown. Carry trade attempt. So these two entries is more than enough for me to give 1:1. This give 1:1. 1:1. I enter here, put the stop loss at this low, or else if I entered my entry at the breaker, put the stop loss at this low, it would be 1:1, clean 1:1.5. And this entry Entered here, if even if I entered here, it gave me at least 1:1, and it's really nice to see that. Yeah, I should do cat. I should do make 500 and 500. If I make risk just $500, I should do for $1,000 in this super tiny easy play section. But unfortunately, I failed to do that. My plan was right, but I entered a bit early, bro. That's the problem. If I just avoid this entry, bro, I should have entered here, take the profit here, book again entered here, at least book some profits here. That's a very big issue was me the last day, yesterday. That's it. So yeah, pretty much it for the video. So in future, I should avoid this kind of impulsive entries. Wait for this price action to occur because it's a clean flip, flip, sweep all the engineered liquidity, and it's kind of it's easy. Everything is engineered liquidity here. First leg most probably should taken, and it's leads this breaker plus the fair value gap. It's kind of rejecting here. They basically stopped at this point. Last candle traded higher flip. It's not only it's after this flip there is no fair value gap. That's not a good sign. The next candle trade higher and reject stopped exactly at this point. The big did some damage, and the following candle gives a nice reaction. And it's kind of then 2 minutes. Nice reaction was done. It's a beautiful reaction, and it is also a beautiful reaction. And here it's a lot of convincing price action here. It's entered a M5 fair value gap, and it's flipped this M5 fair value gap, and the second leg we for sure expect this high, but unfortunately it didn't. Reversed its whole direction and stopped me out. Tried to stop me out here. After this break, after this fair value gap, I should do movement entry to break even. That should be the optimal thing I should do. Like the same thing. After this break, after this displacement, I should move entry to break even. After this sweep, I should take some partials. After this candle, after I should take some partials here. That's the optimal way of managing the trade. Here, nice break, trade test. As soon as I get this move, I should break even my trade. The following move is just take some partials off and book the full profits here. This is not a sweep. This is a clean sweep with a clear change. It's just a clean market maker by market. Right? Yeah, but it's not worked. But it's worked until 1:1. In years, it gave 1:2. That's it, man. Have fun. Chill.